So the first pair we'll be looking at is Australian dollar USD. So let's start with the weekly time frame. What do we have on the weekly? You can see last week candle was strongly bullish, and we experienced a rejection from this resistance. Okay, so after looking at the weekly time frame, we need to go down to the next lower time frame, which is the daily time frame. If we go down to daily time frame and we have an established resistance on the daily time frame, there's a high probability that price will drop. AUD USD will sell, will be bearish this week. If we go down to daily time frame and we have a resistance level, this was a previous resistance on the weekly time frame. We are more concerned about the most recent resistance level. So let's go down to daily and see what we have on daily time frame. So you can see we have a resistance level on daily time frame. This tells me that Australian dollar USD will be bearish this week. Okay, so we have a resistance level here. This is a supply zone. If this zone is broken, that is, if a candlestick closes above this zone, you could look for opportunity to buy. But at the moment, you can't buy. This is a sell setup. Okay, now we have what we call, this is a mitigation block. For those who trade with ICT concept, this is a mitigation block. So we expect price to pull back to this broken resistance zone support. We expect price to pull back to this broken resistance zone support. We could also apply the Fibonacci from this swing low to the recent swing high. So price is expected to pull back to level 50, which is the equilibrium, or 61, which is premium, or 79.0. That's where price is expected to pull back to. So what you need to do is look for a fair value gap. Like I said, we have, this is a mitigation block. Okay, this is a mitigation block. Then do we have a fair value gap at this level? Not fair value gap yet. So let's go down to 4 hour. Let's see if we have a fair value gap on 4 hour. So on 4 hour, this is a fair value gap. Okay, so this is a fair value gap. So I expect price to drop to this level. That's my expectation on Australian dollar USD. If you are considering buying, wait for price to pull back to this discount zone, or if a 4 hour breaks out from this zone, you might want to consider buying Australian dollar USD. But with the setup we have on the chart right now, Australian dollar USD is bearish. It is bearish. That's my take on Australian dollar USD. I'm going to sell to this zone. And if I have a good candlestick formation indicating change in trend around this zone, I would buy Australian dollar USD. I hope that is clear. Let's move to the next pair, New Zealand USD, which is positively correlated with Australian dollar USD. First time frame we'll look at is the weekly. What do we have on the weekly? So you can see the weekly tested the highs of this previous candles. Okay, because we had several stop losses at this level. This is liquidity. So last week candle cleared the stops at this level. Okay, so let's go down to daily. On daily, if we have an established resistance on daily, we should look for opportunity to sell this week. So let's go down to daily and see what we have on daily. So we had a resistance here after the close of this candle. So we should expect price to drop to, this is a mitigation block. For those who trade with ICT concepts, this is a mitigation block. So we should expect price to drop to this level before we consider buying on New Zealand USD. But this week, I'm bearish on New Zealand USD. I'm bearish on New Zealand USD. You could also apply your Fibonacci to take it from this swing low to the current swing high. So we expect price to pull back to a discount level, which is from below 50 to 79. So expect price to pull back to this zone before you consider buying. Before you consider buying, expect price to pull back to this zone. You could also go down to lower time frame to identify fair value gaps around the discount zone. Okay, so let's go down to 4-hour time frame. We have fair value gap. Okay, you can work with this. Work with this. Someone now. Work with this. This is a fair value gap. Okay, so I will be considering buying New Zealand USD around this zone. There has to be a candlestick formation confirming that the trend is about to change from bearish to bullish. So this week, I'm bearish on New Zealand USD. There could also be opportunity to buy. If the market is very volatile, it's possible for price to get to this level before Wednesday. Then on Thursday, Friday, we could see price, go up. I hope you're following. So that's my take on New Zealand USD. Bearish on New Zealand USD. But if price drops to this level, I might consider buying New Zealand USD. So I'm going to take a sell from this point to this zone. Okay, let's look at USD CAD. Starting from the weekly. So what do we have on the weekly? You could see last week candle tested this low. What they actually did was to hunt for the stop losses at this level, clear liquidity at this low. Okay, and the market closed above the low of previous candle. So let's go down to daily time frame. What do I want to confirm on daily? We should have an established support level on daily, and also the daily candle or 4-hour candle should be trading above a resistance level. Daily or 4-hour should be trading above a resistance level. So let's go down to daily. So you see what we have on daily? This is an engulfing pattern. This is an engulfing pattern. And we had the previous support here, which became a resistance. This was a demand level. We call it your support level, right? Which has been broken. It's now a support, right? This candlestick broke this support. It became a resistance. This candlestick broke out from this resistance. It's now a support. Okay, so this is an engulfing pattern confirming change in trend from bearish to bullish. But I would not advise we jump in and start buying at the current market price. Okay, so what you need to do is identify fair value gaps other blocks on lower time frame. It could be 4 hour, could be 1 hour time frame, or you could apply your Fibonacci on this daily bullish candle and ensure that price pulls back at least 50% before you consider buying. Don't jump in and buy. If you buy now, the risk will be very high. Wait for price to pull back. You can see on 4 hour, the market just tested the resistance. So this is likely going to hold. Okay, this is likely going to hold. So we should see price pull back to a fair value gap or an order block, or just ensure that price pulls back to a discount zone, a discount level before you start buying. If you don't know how to identify fair value gaps, order blocks, just wait for price to pull back into a discount level before you buy. So let's go down to 1 hour so that we can identify order blocks. Sorry, fair value gap. And I think we have, if we go to lower time frame, we should find mitigation or breaker block on lower time frame. Let's go to 1 hour. So this is for me. We took out the lows here. Okay. So this is a breaker block. So you should expect price to pull back to this breaker block. And also you would see that you have a fair value gap. This is a fair value gap. So this would be a good area to consider buying. This would be a good area to consider buying. So you could sell if a 4 hour closes below this support. You could sell USD CAD to this level. Long term is bullish, okay, but we should see price pull back to this zone. Remember, USD CAD is negatively correlated with Australian dollar USD and GBP USD. So if our bias on Australian dollar USD is bearish, then we should look for buy setups on USD CAD. Now, it's possible that price will not pull back to this level before it starts going up. What you need to do is look at Australian dollar USD. If Australian dollar USD starts selling and you have a good buy setup on USD CAD, you can buy. USD CAD might not drop to this level. It might not get to this level. Once you see that Australian dollar USD gives you a sell setup, then there should be a buy setup on USD CAD. The candlestick formation will give you, you have the candlestick formation setup on the USD CAD. Okay, I hope that is clear. It's simple, keep it simple. The next pair, let's look at gold before we look at GBP USD. So let's start with the weekly time frame. So what do we have on gold? Gold tested the resistance level last week. There was a pullback from that level. Let's go down to daily. What are we looking for on daily? An established resistance level on the daily time frame. And maybe on 4 hour, 1 hour, there should be a break of support on those time frame. So let's go to daily and see what we have on daily. You can see resistance, it was a previous resistance at this level. This is a sell setup. You can't jump in and buy gold with this setup. If you want to buy gold, a 4 hour candle must close above this resistance. So at the moment, gold is bearish. And we have, I think this is a mitigation block. You can see. This is a mitigation block. So price is likely going to pull back to this resistance. Some support. ICT students will call this, what's it called? Mitigation. For me, this is a resistance broken on support. And when a resistance is broken, becomes a support, price is expected to pull back to that support level. So we should see price pull back to this level on gold. Okay, so I'm bearish on gold this week. Okay, now you have, this is a support here. Kenny, please mute your mic. We have a support here. So the 4-hour candle closes below the support, one can consider selling gold. Okay, one can consider selling gold. We could also experience pullback. Let's see what we have on 1 hour and 15 minutes. You see gold has been in a range. This candlestick broke out. Okay, so we could see price pull back to a fair value gap after this breakout. Let's go to 15 minutes. Let's see if we can identify a fair value gap. Good. So we have a fair value gap of 15 minutes. So we could see price pull back to this zone. You can identify fair value gaps, just apply your Fibonacci from this swing high to the swing low. You see price pull back to a premium level before you consider selling. Okay, so don't jump in and start selling. To be very risky to start selling when market opens. Wait for price to pull back at least 50%. So if price pulls back to this 50% level and you don't want to have patience for price to get to this level, you could enter sell at this level. There has to be a candlestick formation indicating change in trend from bullish to bearish. So you could set your stop loss. Since you know there's a possibility for price to get to this zone, you could set your stop loss at this level. That means the risk will be high. Like I do say, most times the pullback might not occur. You want to be in the market. Okay, so what you need to do is, that's why I always advise you have good funds so that you could execute several trades on same pairs. If you look at most of the traders that make money, they stack their trades. They don't go all in once. Before the market will get to their entry level, they've taken some trades. Do you get it? So it's good to have good capital so that you can execute more than one trade. So personally, if price pulls back to this level 50, I could take a trade. So from this point, my stop loss will be at this level, which is not too high. So I could set it at maybe 50 pips. My stop loss will be around this level. And if price pulls back into this zone and I see a good setup to sell, then I would adjust my stop loss. I will reduce my stop loss. And the trade I will be executing on this, at this level, the risk also will be very low. I hope you're following. So you don't have to wait for price to get to your entry level. Sometimes price will not get there and you will miss that opportunity. So always execute some trade, partial entry before you go all in. That is my advice. Sometimes pullbacks will not occur. Even at this point, if a 4-hour candle closes below this level, I could risk selling. If I'm selling from that level, let's say 4-hour candle closes at this price, this is where I'll set my stop loss. I won't set it at these levels because I know the price could easily pull back to this level and hit my stop loss. But it will be difficult for price to pull back to this level. Anything that makes price breaks this level, then there's a high probability that gold is likely going to keep going up. So my stop loss will be at this level. Then if price pulls back into this level, I will take another trade, then reduce my risk on this first trade. That's how I trade. I hope that is clear. So let's look at GBP.
Sorry, can I say something before?
2 minutes. 2 minutes. When I'm done, I will take questions. Okay? 2 minutes. So let's look at GBP USD and Euro USD. It's obvious GBP USD is bearish. You can see what we have here. This is a bearish setup. This is a bearish setup. We have a support here, some resistance. So the support has become a resistance. Let's start with the weekly. Sorry. So you can see the weekly. We have another block here, right? We have a bearish order block here. The market tested that level. Let's go down to daily. There should be an established resistance on daily time frame. Let's go. Okay, you can see the resistance formed on daily time frame. This is a bearish setup. Now it's likely they want to hunt for stop losses at this level. They know a lot of retail traders that have executed a sell trade. It is likely they would want to hunt for the stop loss at this equal high. It is possible. We have liquidity at this level. So let's go down to 4 hour. Okay, so this is a sell setup on 4 hour. Let's go down to 1 hour. Okay, this is sell also. Support was broken here on 1 hour, which was also a previous support at this level. Can you see that? So let's go down to maybe 5 minutes, 1 minute. Maybe we'll find a fair value gap on those time frame. Let's see, 5 minutes. Okay, maybe price might pull back to, we have one fair value gap here. It's likely price will pull back to this level. It's likely. Still have some fair value gap here, but this fair value gaps here has been tested. Okay. This trend is not clear. I would have said, okay, let's apply Fibonacci from this swing high to swing low, 50% retracement. So you should consider maybe selling around 61.8 or 79.0. That's my take on GBP USD. I am bearish on GBP USD this week. I'm bearish on GBP USD this week. And the last currency pair would be Euro USD. Let's start with the weekly. I think Euro USD is overbought at the moment. Okay. If you apply your, what's it called, stochastic or RSI, I believe it's at overbought level. Let's just look at it. Let's just apply RSI. You can see overbought level. That's its overbought level. Let's go to, okay, this is weekly. Let's go to daily. Weekly will definitely be at overbought. You can see. And what do we have on the charts? This is spinning top, indicating change the trend. If Monday candle closes bearish, we should expect Euro USD to drop to this support level. If that support is broken, then it should drop to this level. Let's go down to 4 hour. So what we have on 4 hour. The 4 hour candle closes below this support. I would take my first trade on Euro USD. If a 4 hour candle closes below this support, I would take my first trade on Euro USD. Let's go down to 1 hour. Okay, so we have a support on 1 hour. So this is the area I would consider selling Euro USD. 4 hour candle must close below this zone. This is a demand zone. Demand. Supply is increasing at the moment. If supply exceeds this demand, then I'll consider selling Euro USD. Let's go to 15 minutes and see what we have on 15 minutes. Okay. Let's go to what time frame? The next lower time frame, 5 minutes. I think this is a breaker block. This is a breaker block. That's a break. Sorry, this should be mitigation. This is a mitigation block on 15 minutes time frame. This is what? This is we have breaker block here. This is a breaker block. This is a breaker block on 15 minutes time frame. So anything that makes price breaks, you can see. Anything that makes 4-hour candle close below this support, it's a sell for me. It's a sell for me. So that will be all for tonight's session. Okay, Kenny, unmute your mic.
Yeah, good evening.
Evening, bro. How are you doing?
I'm fine. Concerning GU, I'm still considering sell because I've been
GU, right? GU.
Yeah. GU.
Yeah.
I've been holding my trade since Friday, selling.
Okay,
so
sell.
I'll be holding it throughout this week.
Still bearish.
Probably, maybe.
Still bearish.
Yeah. The reason why I mute my mic the other time is I saw something on gold.
Okay, let's look at it.
Good. I think daily time frame.
3 minutes. Okay.
Yes. Okay. Yes, this is it. Now, currently we are looking towards sell, right?
Yeah.
So I'll be advising someone who, if the market closes tomorrow, probably maybe as continuation of the sell.
Yeah.
Which I still believe anybody who wish to swing like a swing trader can hold it trade to this volume imbalance.
Yes,
look to the left side. Volume imbalance. Yeah, you see there's a gap there. No gap. There's a gap between these two candles, this long candle.
Okay, yeah.
Yeah, the gap between them, that's volume imbalance. Yeah. So market is coming to that area to fill up that side.
That gap.
So they can hold. But if the reverse is the case, probably maybe tomorrow, like maybe a breaking of that resistance.
They might want for stop losses at this.
Yeah. If the market break it with full candle close, you can look at the other block above.
Right.
There is move to the left side. Move to the left side. Move to the left. Yeah, go up. Go up. That candle, yeah, it has fair value gap and that green candle.
And I think we have
it's a valid order block because it has fair value gap too.
Fair value gap attached to it.
Yeah, price
I
will
think
touch the first
this is a mitigation block.
Yeah.
A breaker, sorry. This will be breaker.
Yeah, that's breaker. Because the price has already touched the breaker and it's used that breaker to go down.
Yes, and so, it might get to that breaker.
No, it has already used that breaker to move down.
Yes.
So
but most times, sometimes too, price tests that breaker several times before.
Yeah. That is why it was listed according to other people terms. So it has used the breaker to move down. So now price will now go back deeper to the other block.
Okay.
If the market breaks, so the other block now will now be TP for buy, and if you are selling, the volume imbalance will be the TP.
Nice one.
All right, that's what
much money to be made on gold. This is about 830 something pips. 830 something pips. Nice one. Okay, so that will be all for tonight's session. Mr. Atokwe, do you have any question?
Thank you, sir.
You're welcome, sir.
Yeah, thank you, sir.
Any question?
Wish you a peaceful week.
Yes, wish you the same. Same. So I'll still be dropping my calls. Okay. Just like I did this past week. I will notify you guys when I see a good setup, a good entry.
Okay.
All right. Do have a wonderful night. Kenny was supposed to meet.
Yeah.
Let's see if that's still possible today. If it's still possible, maybe by 10. joining another class now. Maybe after the
Fair enough.
class.
Okay, let's see. Let's see
All
what
right.
will happen.
All right.
All right.
Thank you. Have a great
All right. Thanks, boss.
night.
All right.